none of our panelists really require an introduction. I wouldn't be doing my job if I didn't take a minute to briefly introduce each panel. With us today from the family office side, we have Ms. Leena Dandekar. Ms. Dandekar is founder and director of Raintree Family Office and Raintree Foundation. We also have Mr. Pramod Bhasin. Mr. Bhasin is chairman of Clix Capital and co-founder of Asha Impact. From the wealth management side, we have Ms. Soumya Rajan. Ms. Rajan is the founder and CEO of Waterfield Advisors. And bringing in some of the fund and investing perspective, we have Mr. Vineet. Mr. Rai is the founder and chairman of the Aavishkaar group. Lastly, we have moderating this event, Mr. Ramraj Pai. Mr. Pai is the CEO of India Impact Investors Council and a true champion of the impact investing ecosystem. Over to you, Ramraj.
Okay, thank you. Mute myself, yeah. Thank you, Praveer, for those introductions. I think welcome, ladies and gentlemen, for what I would say is a very interesting and exciting discussion on the issue of family offices and impact investing. I think we have several stalwarts, if I may say, of the family office space. Mr. Bhasin, Mr. Vineet Rai, Leena ma'am, and Soumya. And I think it's going to be a fascinating discussion. You've already seen a lot of the data and the analysis, which really is an outcome of the research we did, the surveys we did, and some of the data mining that the IIC has been doing. But I think what will also be equally enriching is to really hear from the actual practitioners in terms of what is their experience on the ground. Is this data really borne out in the way people actually look at it when we think about transactions? How can we really surmount some of these challenges and so on is really what we want to discuss. So I think the objective, if I may say, of this panel discussion is broadly threefold. The first is really to showcase that impact investing has a variety of potential investment choices, I think is the first. Second is really to encourage family offices to explore and consider impact investing as a very valuable and important alternative investment opportunity that they should consider when they think of the swath of investment opportunities in front of them. And I think the third is really to provide perspective to the larger ecosystem of investment bankers, advisors, and other people in terms of how is it that they can support the family offices and build out this system in a much bigger way. We do appreciate that this is a market which is nascent and it is growing. And there will be those initial pangs of trying to build the distribution pipelines and all of those things. But I think it will be valuable for investment advisors and others to also think about this. So that's pretty much what the broad objectives are. As far as the topics for discussion today, I think again three broad topics for discussion. One is we'll start off by requesting the panelists to share a bit about their impact investing journeys. All of them have come into this space in their own unique ways. Vineet has come at it purely from an entrepreneurial perspective. I would say, Leena ma'am and Mr. Bhasin have come at it more from an investment perspective. Soumya, you would have come at it more from an advisor, an investment advisory perspective for the family offices. So I think the first part we want to just cover is this whole issue of how have your personal journeys been? Because finally, I think that touch and feel and flavor is very important. I think the second issue we want to talk about is this whole issue of creating returns and creating social impact. And I think it's an important topic. And I think it's something that we should discuss and debate in terms of both, the ability for the market to do this. And second is also the market for below market rate returns, which is again a little bit of a controversial topic. Is there really a market for below market rate returns? And the third is really around the challenges and impediments. So I think this is what we want to cover in the next 40-45 minutes. Last 10-15 minutes, we will take questions. But if people come up with really intelligent questions sometime in the interim, we'll be happy to try and integrate them. So what I'm going to do is maybe, I'll just start off with quickly on the impact investing journeys. And maybe I'll start with Mr. Bhasin. Mr. Bhasin, yours have been a very if I may say, a unique journey from a professional to an entrepreneur to possibly an impact investor and then a co-founder of Asha Impact. And you are today a person who not only invests, on the platform into companies like Gramophone and into, Vartana and some of the others, but you also do work and engage with other family offices, encouraging them to invest through the platform. So maybe, we can just start by, you sharing a little bit of your journey and what have been your sort of perspectives as you've sort of moved along on this particular path. And then slowly we will go to each of the other people on the panel.
It's very kind of you. Thank you for having us on this wonderful panel. And I was very keenly listening to the findings of the report, which shows, I think, in my takeaway was it shows a level of ambivalence, perhaps, that people have towards impact investing. The number of people who think impact and investment and returns go together, and the equal number of people who seem to think, no, they don't. So it's quite interesting and clearly a subject which will require a lot of debate and discussion over time. I'll talk about our own journey, of course, which is a smaller journey perhaps than others on the panel here who've done this for a longer time. Asha Impact is founded by Vikram Gandhi and myself, and we got together many years ago at this point in time. It feels like it was yesterday, but it feels like it really is about 6-7 years ago. And our premise was very simple in India, that we said, one, there is very little money flowing into this area for a variety of areas, which we didn't totally understand, and I still don't. I still don't understand why family offices don't go there, because the opportunity in India was very clear to us that given the number of gaps you have, and all of you know this, so I'm just saying it just to summarize our point of view. We all know this. The opportunity in India is because there are so many gaps in almost every area. So if you look at healthcare, education, water pollution, financial services, pharmacies, you can look at almost anything, communications, technologies, anything, and there's enough room for improvement and enough room to make a difference. Two, it's very clear that the bigger market eventually is going to be the smaller towns and will arise not just from the so-called middle class, but will arise from people who are striving to come up with value chain and striving to increase their wealth basket. We see that all across the board. You'll see that at the farm level, you'll see that at the village level, you'll see that at the panchayat level. We see it everywhere. So certainly when I was doing my skills work before this, we could see that confluence of a lot of efforts, digital literacy, access to mobile phones, access to financial services, all of them coming together very nicely to allow people to think of new ideas and new ways of doing business. Our view was that there is a lot of money and overseas money flowing into other areas, such as traditional venture capital, etc. I mean, for instance, one of the points I would just like to make on this study is that, on HNI, only 3% make investments, as you said, into family offices make investment into impact investment. By the way, the total amount of investment by Indians in venture capital in India, venture capital is less than 5%. It's 5%, right? So I don't know where all this money is going or where they're putting it, or where are they burying it under which pillow or which blanket. But that's a remarkable statistic, I thought, at a time when startups are booming. So our aim was, we thought there's enough money going in that, and is there a way for us to channelize money differently? Initially, I will tell you, I think we started with a premise that said that we will set up a team, and we have a wonderful team at Asha Impact who are fantastic people who go out and do this work. We thought we'll set up a team which will go and look at deals which have real, highly quantifiable impact investments across the board. So that's why we did Varthana, we've done Greenways, we've done a whole bunch of investments, we've done Adda, etc. But as we invested, and we made mistakes, and I won't go on forever, I promise, I'll end soon. We made lots of mistakes, some deals, couple of one or two healthcare deals where we didn't really understand the subject matter, but was meant to provide very cheap solutions for a problem, a significant problem across India. Well, it didn't do very well right from day one, and that was that. And similarly, other issues with founders, etc., were much more profound in this area, where we found that certainly people focused on the impact area perhaps are driven by motivations which sometimes are not sustainable, for instance. But as we went into the program, we also discovered a couple of things which I think are important. One, our returns have been no less. I do a lot of investment otherwise also. Our returns have been no less than what I have seen on the other side. In fact, on the other side, I've made more mistakes. Perhaps our team in Asha Impact is better than my own thinking, because I apply my own brain to these investments and it doesn't work that well. And some of them fall flat on their face. But our returns have been really very. Why? Because the opportunity in India, even in areas where you can create massive impact. You can see what's happening in education. And I'm not talking about education at the higher levels or for tuition at the high. I'm talking about very grassroots education, trying to help people get jobs, which is what Adda, for instance, does into the government services and basic levels. Similarly, in financial inclusion, which I think we're all aware of, is a very big area. Healthcare, pollution, waste management. These are all areas where we really felt that the opportunity has been terrific. The returns are very, very good. And equally, we are very confident of the impact we are making. Where we haven't done enough work, and I'll end with this, is we haven't quantified impact as much. We've kind of taken it for granted. And I think that's a flaw, which we need to correct. We need to be able to go out and show people, look, there's a real impact to this. Now, sometimes it's obvious and intuitive, but that's not sufficient. So my objective here would be to tell everyone, look, there's such a massive opportunity in India. I do not see any reason why you need to sacrifice returns. I'll add one last thing, sorry. We do take more risk from time to time. We do take a greater leap of faith. So sometimes our due diligence cannot diligence all the leaps of faith we need to make, and that we sit back and decide. And yes, that has negative results. But broadly, India and that market represents a fabulous opportunity. And I just wish more money would pour into this sector, because India needs it and it's good for you and it gives you great returns. Sorry to have taken so long.
No. Thank you, Pramod. I think you have set an excellent sort of, if I may say, initial comments, and maybe I can move over to Leena ma'am. And I think we at IIC have been engaging with a variety of family offices, and what has always struck me about Raintree is the very deliberate sort of thinking around how you look at sustainability, impact, ESG, as well as the work that you do on the philanthropy side. We are aware that you have made investments in companies like Smart Jewels. We are aware that you're looking at some of the other assets. And I think you and I have spoken on multiple occasions about how you look at impact investing, and particularly the focus that you have on growth stage companies. And what I thought is maybe we can request you to share some of your initial thoughts on how you sort of moved on this journey, and how are you sort of looking at this whole impact investing space as we move ahead.
Yeah, thank you for having me in this panel. Thank you, I think, Soumya and IIC, for all the support that you always continue to give us. So our journey started with us needing to reinvent ourselves. So we had a liquidity event, we exit our family businesses, and we have a very strong legacy from there. And we needed to create an equally strong legacy rooted in equally strong value systems to take forward and reinvent ourselves for myself and the next generations to come. And one of our first thoughts was with liquidity events such as these, which we see fairly often these days, is the fact that your bills are taken care of and there's only so much that you need. And we said, okay, we have more than we need now. What are we going to do with it? Because that is a very important question for every family to ask if they have a little more than what they actually require, right? And that's where my two children, who are a little more than children, now they're 29 and 25, they came in. We really felt very strongly that we needed to carve out at the root, while we are building the new portfolio, in year zero, carve out a portfolio which we can dedicate to making an impact. And as we research further, we realize we are open to use all methods of impact to get there, so long as we have a sharply focused impact philosophy, and we can stay together and stay on focus and on track. patiently, because no impact happens in these 3-year, 5-year horizons. You have to have a longer viewpoint as a family to do that. And therefore we started looking at what allocations do we need, and Waterfield and their teams are very useful in helping us decide what is that number, that percentage allocation to impact that we can live with for the next 10-20 years. And so as of now, we've allocated 30% of our entire portfolio to impact, not necessarily allocating it to a particular form of impact or another, but as an umbrella bucket. We've also allocated anywhere between 10 and 20% of our annual incomes towards philanthropy. So that's our commitment. We will keep at it. We will keep at it year in, year out, and we will, as the impact industry matures, find the best methods for that given day and try and make the wisest decisions we can as we go along. Coming to our growth stage strategy, it comes from the fact that we have a fairly large allocation. This impact portfolio is which we are creating, we are only in year 1 or 2 now, is expected to create a very robust impact portfolio where this money will bring in more money and that can be reinvested. And it's us seeding the family's commitment to impact for a very long time to come. And so capital protection was a big viewpoint there, because I don't know very many families who can afford to lose 30% or 10% of their portfolio at all. And so capital protection became a viewpoint because there was a larger allocation. And because we look at capital protection, then we started looking at growth stage, because we understand that there are muted returns, but we also understand that the risk is also significantly muted if the business model is established. As far as impact goes, we have in simple English with no jargon thrown in, a do no harm policy, which is where our ESG focus comes in. We said, okay, if we can't do good, we must stop doing harm. And therefore we have an ESG policy. We are very strongly pushing our advisors, and Soumya will tell you, and her team will tell you, annoying questions that I ask them every single day on all instruments, whether it's AIFs, capital markets, debt, anything, everything, to ask whether it fits in with our ESG compliance list, right? So that works fairly simply. We have a negative list, which we will absolutely not do. Of course, there are no black and white lines here. Sometimes the grays come in and we try and take our best call on whether it fits or doesn't fit. And that's our do no harm portfolio. We are trying to apply our ESG sensibilities to not just our alternative asset portfolio, but also trying to stretch it to capital markets. And we are aggressively talking to all product providers and including our wealth advisors to create products for us which can accommodate our negative list. So far as I think, have I covered everything, or do I have anything else? So on the focus areas, I'm not averse to doing early stage or seed or venture. I just think it will be a subset. As with all alpha strategies, this will be a small subset of that 30%. And to that extent, whenever we find a fund which or any proposition which excites us enough, which we buy into, we will do it at that point. So some of the funds have not worked out for us so far, because like we all know, most of the money coming into funds comes from overseas. And the proof of the fact is in the report, when we read it out, we talked about the dollars invested in our country, right? We'd never talk about money invested in impact in rupee terms. I earn in rupees, I spend in rupees, we think in rupees, and we like more products coming our way, which are made for the domestic investor and do not come with that overseas investor viewpoint, because in India, because we are 1 billion plus people, a lot of our overseas investors look at people-oriented impact investing, because that's where the focus logically is. My family, the children and I are very planet focused as well, and not just people focused. Our impact philosophy is from philanthropy to our ESG investing, which is, do no harm, to philanthropy, which is the other end of the spectrum, is planet first. And the reality of the planet and what we are doing to it is a lot more real, a very scary proposition for my children in their late 20s. And my son sometimes will talk about why should he even plan a career, because in the 60 years of life he has left, his home, his planet is not going to support him. It's very real, and therefore we consciously look out for opportunities where we are looking at climate change, we are looking at environmental issues, we are looking at waste, a bunch of things. Having said that, the funnel is open for any other propositions, but when we do an active outreach and look for sectors that we want to invest in, definitely we are planet focused more than we are people focused. And not to say that we will not do any other kind of investments. So that's where we came about. I think when, and the whole, I think, steady kind of philosophy that we have is just us. We like to think through things, take our own time. And I guess Soumya and Waterfield will be able to tell you, we don't jump into anything. If somebody tells me you have to decide in 7 days, I say no. Unless we have time to think about things, we've thought things through, unless we can commit for a significant period of time, we will not go down that path. And I think just this whole structuring, the whole thinking it through comes from the fact that we are steady value investors in every area of investment that we do. And that just that kind of deep thought that we try. We don't always fail, don't always succeed, but we do try and put in a steady thought process to every kind of investing that we do. So that's where Raintree's philosophy comes from. So it goes from ESG conscious investing to philanthropy and everything in between. And we are open to investing in all kinds of impact opportunities that will come our way.
Yeah. Thank you, Leena ma'am. Maybe I'll now move to Vineet, and I think as someone who's been, if I may say, the pioneer in impact investing, not just from an Indian context, but I would want to believe and think that maybe when you are doing what you are doing, the term also may not have been specifically, kind of coined, the whole idea of impact investing. So you are someone who's looking at this whole thing from the other side, which is really the asset management and the origination of impact entrepreneurs and supporting them side. So maybe we'll just, Vineet, it'll be great for you, for the audience also here, for you to, in a quick couple of minutes, share your journey and some of your initial thoughts before we get into some of the, broader details around, some of the other issues that we wanted to speak about. So over to you, Vineet.
Thanks, Ram, for having me here. Pramod and Leena have actually set the context with great clarity. So I am actually a forester. So my journey has been a slightly unconventional in that sense. The only reason I am in impact investing is because my wife refused to stay in the forest. And given that I had no other job, I went to IIM Ahmedabad and then set up India's first incubator. And then realized that people wanted to be rich. Being rich was not considered good. So I was quite surprised. I mean, I came from a middle-class family, so nobody was rich in my family. But I was quite fascinated by the desire in Odisha, where I was in the forest. Every person I met aspired to be rich. But when I used to talk to people who were middle class or upper middle class, they always looked down on other rich people. And this dichotomy has always surprised me. So when I was working with farmers and trying to convert their innovation in business, while I set up the first rural incubator in '97 for government of Gujarat, it was reinforced again. And I realized entrepreneurship is a solution. Business is actually a way to become rich, because rich people do business. That was my learning. And because I'm a pastor, I'm pretty simplistic in my language issues. So I realized for building a business or entrepreneurship, you require risk capital. And funnily, there was just no risk capital available. I came to know about a term called venture capital from Vishnu Varshme, who happened to be on my board. And I said, well, my learning is that Indians have dime a dozen ideas, and what you require is a lot of risk capital, specifically backed up by talent. So if you can put capital and talent together, you can probably bring a significant change to poor people in India. Like Leena pointed out, I was very people focused. I was not really thinking about anything, despite being a forester. But I've tried to cover that journey in the later part of my history. And 2001, I actually quit my job with 5,000 rupees, started Aavishkaar. Of course, struggled very badly after that, because at 29, you can be very enthusiastic, but quite stupid. And I was both at the same time. Over the next, and interestingly, Ram, as you mentioned, I, Jacqueline Ramraj, and Ronnie Cohen started same time, same year in 3 different parts of the world. Jacqueline in New York, I was in India, and none of us used the word impact investing. And we only agreed on the term impact investing to represent all of us only in 2008. And the reason we agreed to it is because Rockefeller promised to put $1 million behind the word. And we realized if you put in $1 million, then name would actually be part of everybody's lexicon. And that's what happened actually. So all of us started calling ourselves impact investor as early or as late as 2008. And coming back to the discoveries that was made in the report, it is largely because impact investing as a term is 13 years old. It's not a very old term, it's a very new term. The definition of impact investing has yo-yoed from everything is impact investing. So Unilever is impact investing, and so is Reliance, because you create jobs, you work with people, etc., etc. Two, you have to make less money, muted returns, low returns, etc. Unfortunately, impact investing has nothing to do with returns or impact. Both of them are outcomes which we aspire to deliver. And I think what we are, in a very simplistic language, is you are trying to look at an entrepreneurial way of solving a social problem, which is complex. The outcome of using the entrepreneurial way is that you may have for-profit return and you may have significant impact. So these are outcomes and outcomes. But the input is capital and risk and entrepreneurial thought process. And there is a screen called social screen. So very simply put, impact investing is when somebody looks at a business and say, do you make impact or not? And in her or his judgment, agrees that you make impact. So Leena has a different lens, Pramod has a different lens, Soumya may have a different lens, I may have a different lens. But we are actually asking that question before we start diligencing a business. Now, once you go to the second part of it, which you start diligencing the business, you are essentially focusing on, while making the impact, will this guy deliver a return? That's the second part of it. And then, like happens in venture capital and private equity and anything else, you pray to God after giving the money to the entrepreneur so that you can make money. And it happens irrespective whether you do private equity or whether some of you who have actually invested in some really remarkable impact enterprises that have got listed, which make huge negative losses, but are value driven. They are also, in some sense, impact investing was creating large scale jobs. I think if you look at the ROE at the enterprise level, there is no ROE. But as an investor, you might actually see a lot of value creation. Impact investors have largely focused on for-profit creation. So if you look around, a large number of impact investors and entrepreneurs have tried to break even, which means their growth rates have not been as good as a lot of tech ventures have. And I think I'll conclude by saying that while I started with the idea of connecting talent with capital to bring about a solution, I think technology has become the third orbit. So if you bring technology, talent, and capital together to solve a complex social problem, you potentially will see a lot of these, a term that I actually dislike, but will have to still use. For those seeking returns, unicorns, and for those seeking impact, also unicorns, but delivering a billion people impact. So you can choose which side you want to emphasize more, but I think that's really what's going to happen. And that's my journey, is that I have added technology in the last 20 years to my language. And I've also started believing in the term unicorn. Whether you like it or not, it actually excites a lot more people than the impact that we make.
Thank you, Vineet. I think, as always, the clarity with which you sort of think about the whole issue of impact is always valuable. Just quickly move on to Soumya before we go on to the other questions. And Soumya, obviously Waterfield and yourself personally, you've been working with so many family offices on their sustainability and impact journey. Leena herself made a mention. I'd love for you to quickly, from your side of things as an investment advisor, what are some of the issues you've seen and how do you think as an ecosystem we can kind of work with family offices more effectively? I just request your quick comments on that as we move on to some of the other points that we want to make.
Sure. Thank you so much, Ramraj. And I think there's some really great points which have already been shared by Pramod, Leena, and Vineet. I'm just going to add to it really from the family office lens. And I think where Waterfield sits, we are really in a very unique position because on the one hand, we see those families and those individuals that have the capital. And on the other, we actually see the social ventures that actually need the capital. So our role, and one of the reasons which I'm personally passionate about is how do we bridge this gap? How do we bridge the capital flow from one side to the other? And that's really in the sense that the way I see it is that Waterfield and the family offices that we work with and the families we work with really do see themselves as custodians of the wealth for future generations. And therefore, the capital that family offices have, the intent of that capital is very different. The intent of the capital is both patient as well as being long-term. And therefore, it's quite a natural fit that they should actually start looking at impact investments. What was interesting from the report is that 1 out of 2 family offices today already are impact investors. The question then for us is, can that quantum of capital, which they're actually allocating, can that be more? And to maybe a point that Pramod had raised earlier in terms of why did they even start their journey was how could they get more capital in here? But players like us could actually be helping to formalize that entire process, which was rather informal in the past. It's very ad hoc, but can organizations like ours come in to help with that formalized capital that you allocate to this space? And that's where I think Anushree mentioned it. I call it sustainable development capital, because ultimately, whether it goes as a grant, whether it goes as an impact investment, it has to really be channelized towards capital, which is segregated and separated for family offices. And I think the last point that I'll probably just leave with the group is that families want their wealth to have a purpose at the end of the day. And that's a very large motivator, and it's really getting pushed by the next gen as well. We must remember that family businesses, family offices, which are created by successful families, they also have fundamentally family values. What is impact investing? It is really values-based priorities when you're investing. And so it's like a natural outcome of what already sits in their DNA. So, which is one of the reasons why I think, the whole family office space, family office capital can really galvanize this entire ecosystem.
Thank you for those points. I think what you said is very eloquent, if I may say that, what is impact investing is really impact, investing in line with your values. I'm just going to kind of go on to the next topic, and maybe from this question onwards, we'll try and keep this a little bit more, not just going from one after the other, is really this whole issue of creating distinct social impact and also generating returns. I think I do agree that there is a certain comprehension issue in some at some level that what is impact investing and how do you generate impact and returns. But for a moment, if we assume that we are talking about for-profit impact investing, I just like all of the panels to maybe share, and all of you have your own unique experiences. I'm sure Mr. Bhasin, you would have interacted with multiple family offices when you may have been showcasing some opportunities from your platform to them. Vineet, from your side, I'm sure as a part of your fundraise, you'll be reaching out to family offices. What is the thinking that exists? And I know that our survey shows that the data is kind of split between the one side of yes, they can do both impact and returns, and the other side says no, you can't do impact and returns. What's your actual take on the ground, in terms of at least the for-profit kind of opportunities. And maybe Leena, you can also share a little bit later, because I do know that you have both, and you are very nice in the way you put 30% and 10% and so on. Maybe you can also share your own organizational philosophy. So what I want to do is just sort of leave this question out there, and maybe just get quick reactions from everyone in a slightly more unstructured level, that, how should we think about this? At the IIC, we are already, working, and we have begun work on trying to really, document returns on exits that the sector has made over the last 5 to 6 years. But that's a study which is still some time in the making. We've got to collect a huge amount of information. But, and we realize that the data is important. But maybe we can all hear from you, from your own sides and from where you sit. How do you see this particular issue, and how should we explain this in a fairly simple manner to a family office who's thinking about impact investing? Let me just open it up and get quick responses from all of you.
I can go ahead from my point of view. I think impact investing, and if you have to look at the history as well. So microfinance, financial inclusion was a great impact investing story. 2001, 2, 3, 5, 6, 7. Suddenly everybody in the world discovered that there is a lot of money to be made here. And there, what you call is the blurring of the lines between mainstream investing and impact investing. Why do we exist as impact investors? Our job is to actually attract the global capital. And I keep repeating it. Our job is not to stay distinct. Our job is to actually merge in the mainstream world. The world has $300 trillion of capital, and we are to attract $3 trillion towards the social problems. And one way to do it is by attracting the 300 trillion to actually consider it. So just a 1% activity. We have very, very small amounts of capital. The philanthropy capital is less than 300 billion. And this includes the IFCs, the World Bank, the government of India, and all the money that we need to put together. So really the objective of impact investing is to actually pick up microfinance, nurture it, scale it up, and then let the commercial capital play the role. Just to give you an idea, when I made my first investment in microfinance, India's outstanding was 100 crores. Today's India's outstanding is 3 lakh crores. Now, wouldn't that be a brilliant journey for scale and success and impact? Will that create some negativities? Yes, when you actually bring in uneducated investors who are chasing returns, you will create excesses, you will create challenges, and those challenges need to be structurally answered. That does not make microfinance bad. If you ask me very honestly, is microfinance the best instrument for the poor? The answer is no. But is it a better instrument than what is currently there? Answer is yes. And so till the time we find a better way of doing it, microfinance will continue to remain and should continue to scale. Coming to agriculture, I started investing in agriculture as early as 2006, 7, 8, 9, 10. Today, agriculture is an exciting projection because it's a very large sector. It is actually a sector that has been disrupted by, so agriculture was a very large sector always, but it was never a place that attracted talent. It was also not a place where technology saw much role. But if you see in last 3-4 years, you are hearing about agri companies using technology, raising hundreds of millions of dollars. Now that's the role of an impact entrepreneur or impact investor, is to identify a large problem that affects a large number of people, come up with solutions, and disrupt the space. Technology probably is getting more and more increasingly important. And finally, if you look at waste, water, sanitation, carbon credits, forestry, all these are areas waiting for disruption. My personal prediction is between 2020 and 2030, climate, India specifically on climate and pollution, because we are directly impacted by it. I mean, I was talking to a farmer recently, the amount of changes that are taking place in weather and the kind of viruses and parasites they are dealing with right now, even large farmers are struggling, forget about the small farmers. And therefore, climate is impacting life at all levels. And we will have to invest significantly. And COP26 Glasgow, the sudden infusion of capital that you will see from worldwide. And I think there is an early awakening sign that's taking place in India as well. And you heard from Leena, she's saying, I'm more concerned about the planet. And I'll tell you as Aavishkaar, we were very concerned about people. But then we started realizing that climate is actually completely doing away all the good work we do, because you have typhoons, you have cyclones, you have flood, you have changing of river basins, etc. that is actually wiping out. So it's almost like building a castle next to a sea, and every wave wipes out all the work that you do. So unless you actually try to hold and solve the problem of climate, all the work that we are doing on the people front is actually getting washed off. And so long and short of it, what we are all trying to do is, when you say you are going to invest in impact investing, you are essentially working with fund managers or entrepreneurs directly or through the fund managers, identifying and ushering those sectors that needs to be disrupted at scale, and then convincing the mainstream to participate in it. Because if we do not convince the mainstream, then this will remain a cute fad. And I do not think our role is to be a cute fad. Our role is to attract the largest amount of capital. And see, we are only talking about 1% of global capital. So it's not huge, $3 trillion, India's current economy, GDP. That's what we have to attract for the whole world, to actually deliver the 2030 of the world that all our leaders have imagined. No hunger, no poverty, no inequity. And that cannot be done without actually addressing all the challenges. So I'll just stop here.
Great. No, I think, Vineet, that was a great sort of broad points you made in terms of how impact investors actually are the early investors. And that's something we see in our data also. In most of the sectors, if I look 5 years back, impact investor would have been the only investor doing.
We're losing you, Ramraj, I think, unless I'm the only guy.
No, I'm losing him too.
Yeah.
I think we are all struggling.
Apologies. There seems to be an issue with Ramraj. Ramraj, are you back?
He's back.
Pramod,
Yeah, you're back, Ramraj. I think we can see and hear you.
great. So, Mr. Bhasin or Leena, do you want to take on this issue of impact and returns possibly? Do you want to share some of your thoughts? How do you see it? And I think Vineet made a great point, but I think what is also embedded in what you said, Vineet, is that as impact investors, you have to take definitely, therefore, in very new areas, a lot more risk, because these are not traditional sectors. So, how do we really, therefore, think about the impact returns continuum? Maybe Mr. Bhasin or Leena, if you have any thoughts on this.
Leena, please go ahead.
Okay, sure. So I agree with Vineet that this isn't a fad. Right? It needs to, the desire to do impact needs to go into every area of your life, and deploying your capital is one way to do it. It's not the only way to do it. So it goes way beyond, just looking at it as a pure investment. But we call it an investment, right? Investment is always done to make money. And therefore, making some amount of money is, I guess, intrinsic in the very word that we use. However, I think the impact industry, impact investing, largely defined the terms and the terminology, I think, and methods as well, as largely defined by the funds that we have. I do believe that there are very loads of unexplored ways to create an impact, which we still to evolve, and we will be happy to be part of that journey. One such way is what we are doing, that we look at growth stage investments. Very early on, we say, is this ESG compliant? Then we look at it further. We say, is that an impact enterprise as a subset of the do no harm portfolio? Is it making a social or an environment or a climate impact with an intention? Is the product or service geared to solve a problem, right? Is it in its intentionality solving an issue which we need to solve? But beyond that, the diligence is actually the same diligence as for any other investment. So that doesn't differ, because the fundamentals of the business still need to be strong. The management team still needs to be good. It needs to have some disruption, some moat for competition, a bunch of things that you'd see as an investor. That doesn't change. Also, I don't think we can be overly focused on what is the range of return, because, just as in a portfolio, you invest in a bunch of categories. On the risk return portfolio, you'll do some AAA debt, you'll do some AA debt, You never say at any point of time across the assets in your portfolio that you want just exactly this return for everything, right? Or just exactly this risk for everything. There is a trade-off involved. And I think case to case, proposal to proposal, Raintree would like to evaluate that and like Vineet said, take a leap of faith at some point saying this is what you want to do. Definitely, because impact is not measured uniformly, we don't have uniform terminology, methodology to measure impact across the spectrum of different methods that we use. I think that does create a problem because the only metrics we are using to evaluate our impact portfolio is the return then.
Right.
And that is a one-sided view. And we
Yeah.
are not able to give you a balanced, like a weighted average of both our perspectives, which went into creating, committing to that investment.
Yeah.
And I think as the industry evolves, definitely we will get more metrics, more methods of evaluating whether you made a good impact investment or not.
Got it.
Because your social return is completely ignored. Your impact is completely ignored in the way that you're evaluating a return. So every time we evaluate a fund, an impact fund, we are told fund manager ka track record ye hai, this, that. It's one-sided. It's one-sided. It's never giving us the track record for a fund manager for the impact that they created. And I think if you're always taking a one-sided view when selling your proposition, then you're getting a one-sided view when evaluating what you did post facto as well. So I think a lot of the terminology, methodology that we use is dictated by the funds. However, as more family offices, individuals, people like Asha Impact, which is a consortium of investors, etc., start coming in, I think hopefully we'll find some middle ground to the whole debate. As for risk return, I think any asset that you create, you do look at risk and return. For example, I'm building a house in Pune where I now live, and I'm building a sustainable home and I'm getting an IGBC certification. Because for me, impact is a lifestyle choice across all spectrums of everything that I do, right? So for me to live in a house which is not sustainable is not a choice. And everywhere in my personal life, in my professional life, I will try and reduce the impact that my lifestyle has on the planet wherever I can, including taking the train, taking public transport, choosing electric vehicles. It could be across. So these are also assets that a family office creates.
Right.
It's not just deploying in a fund or doing private equity. There is a bunch of assets that you create. And right now I'm creating an asset in the form of a house, which is going to get an IGBC certification as a green building. So I think that the whole impact focus goes beyond what the industry or a body like IIC can quantify.
Yeah.
It goes into many other areas which we do not have methods to measure or evaluate performance for. So that's where we work. Happy to work with the sector always to find better ways of measuring what we all do.
Yeah, great, Leena. Thank you so much, Mr. Bhasin. Some thoughts from you on this particular topic. I think.
Sure. I know we're running out of time and we'll all have to go. So just very briefly, I think there are 2 or 3 things. One, impact investment is a scary word for many people. We should be very clear on this. A lot of investors look at it, the family offices look at it, and unless they've been given that direction, going into them and saying, hey, look, this is about impact investment, this is who we are, tends to create a bias. I found, and perhaps I'm wrong on this, and I hope it changes dramatically, and I have some thoughts on how it will change. I found that tends to, 2, unless the family office, people running the family offices are incentivized differently for impact investment, right? Why will they choose to take that leap of faith? And I think that's a very important element that we must think about as we go forward, because, at Asha Impact, I'm thinking as we talk, that our incentives are very much aligned with the normal fund, right? It's not aligned in any aspect with did we make an impact or not. Now, if that's the case, then the people who come in, of course, are very dedicated towards impact investment. But I think in the family offices and everywhere else also, you are going to talk to people who have multiple choices, and they will look at one versus the other and say, all right, how does this play out, not just for the family offices, but for me, etc. And so that bias has to be taken away. And that has a lot to do with incentives, just like it does anywhere else in the world, in any kind of investment. Then that incentive has to be aligned. Two, I think the difference today is also driven by technology, as Vineet was saying. And I totally agree with his points. Microfinance came up, and what a journey it's been through. Technology, I think, is going to be able to drive that kind of a journey in many other industries. So healthcare, to me, is very clearly one. Financial inclusion, another one, not just microfinance, but financial inclusion in providing loans to SMEs, small scale sector, micro SMEs, small businesses, kirana shops, all of that. That's going to happen. In healthcare, we are not going to be able to produce enough doctors and nurses in this country to solve for India's healthcare needs. It's going to be solved by providing all kinds of technological support, particularly in the rural small areas. So there are areas like that which I think will have their microfinance moment now that you can use technology to reach the last mile, which really has been the problem. Not only will it solve a problem, it will open a market. And I think that combination of events will actually make a huge difference. Right. And lastly, I think if we think more about sustainability, which everybody is having to do, and I think very few people have the dedication that Leena is talking about in her family, the way they live, the way they travel, etc. Most people don't. I mean, I can tell you I'm devoted to this subject, and I'm not remotely close to what Leena does in terms of the way they choose to live their life. And I think I'm not sure how many people would do that, but nevertheless, thinking about sustainability very differently in every investment we do, every area we do, I think becomes a huge, huge position. And so sometimes I wonder whether we should be calling ourselves impact investment, should be calling ourselves something else, should be calling ourselves profit, sustainability with profit, because that is a notion which I think we need to bring in for a lot more money to flow into the system. One of the interesting statistics which came out of the study, which I thought was fascinating, is that only 20% of the people reinvested in that space. Now that's, to me, really surprising. Obviously, the investments didn't work out too well, otherwise they would have come back, I'm assuming. But, to make that leap of faith and make that investment, the impact lens has to be there very firmly. It cannot be as loose as it is today. And I think tightening that lens will make a huge difference.
No, I think that's something which is coming out very clearly, both from what Leena ma'am said and what Mr. Bhasin you're saying, is that, the impact lens is something that, we need to showcase possibly a lot more along with the financial returns, not just at the level of the investment, but also possibly in the way we incentivize asset managers and so on and so forth. I think we are running out of time. So what I wanted to do is, as a last question, I just wanted maybe 1 minute from each of you, starting with Soumya, just a couple of thoughts in terms of what is it that we can do to support the ecosystem, to support the family offices. If you could just mention just clearly 1 or 2 things that you feel we should be doing as an industry, as a sector, to really help and bring more of these family offices back into the system, and sort of get more enthusiastic and more sort of energized towards impact investing. I'd just like each of you to take 1 minute, because I just would like to close this definitely in the next 5 minutes. So over to you, Soumya. I'm sorry, we're just trying to try.
Sure, Ramraj. And I think for me, the way I look at it is where we sit, it's ultimately around the access, the advice, and the articulation. So the access, what we saw from the report, clearly families are saying, I'm not able to access products, I'm not able to access deal flow. I just don't know where these opportunities exist. We're seeing 23% of family offices saying, I don't get the right advice from my wealth manager. So advice, education, awareness is the second big piece that we have to close out. And the third is really around articulation. We have to articulate the impact of the investments that are being made. So that's my very quick summary.
Sure. Vineet, maybe some thoughts from your side?
No, I think some very good points that Leena had outlined and Pramod did as well. The only thing I would say is I have always been asked, depending on whether the private market is giving better returns or the public market's being given a return, why should we give you money when after 10-year lock-in, you are going to give us barely a 15% return. And so therefore the decision making is actually not being made because there is a specific allocation like Leena has made to investing, where a conscious diligence will be done on the impact side. It is being done on the basis of whether impact investing can deliver unparalleled returns. Now there it is too early. I won't say that impact investing will always deliver low returns. I actually believe impact investing delivers unpredictable returns. In microfinance, some funds have delivered exceptional returns. And in other places, we have delivered lower returns because we are pioneers and it takes time. So if you just look at Zomato's journey, and if you ask Sanjeev Bhikchandan, it took 14, 15 years to deliver returns. Then it delivered a very large return. Similarly, microfinance also delivered very large return. And some of the agriculture portfolio companies of ours are also delivering exceptional return. On a portfolio basis, though, you will deliver a return which some can call, compared to what the public markets have delivered in the last 12 months, exceptionally muted. And the word muted is very interesting. It actually is a relative word. So 35 is muted compared to 50 or 75. And I think what we need to just probably have leaders like Leena and Pramod and others probably provide that role model. And I think Sunil Munjal, when he invested 100 crores in Aavishkaar, in some sense, and if Soumya's research is right, then effectively one gentleman in one day put in 15% of all capital that is given. And I'm talking about 2017. So in 2021 also he is 15% of all capital. And he's just put in another 100 crores in a direct investee company of ours. That makes him actually a very large shareholder. Now, some of these people like Leena, like Mr. Munjal, like Pramod, actually take a very proactive stance. And Ramraj, if you can actually showcase them as model leaders for the sector, it would probably make a huge difference to impact entrepreneurs and impact funds like us and many others. Also, the very nuanced thought process that you do an allocation and there is a sub-allocation to philanthropy. And I'm actually a great believer that impact investing only supports philanthropy. It cannot replace philanthropy. So we are a small extension on that continuum of pure returns to this thing. And we are not an answer to everything in the world. So these are the two important things. And I think leaders, especially from the family office side, should be able to showcase that thought process. It's very difficult. I'm a biased person. I'm trying to get money out. So my point of view is actually not that relevant.
Right, right. Leena, some thoughts from you, ma'am?
Yes, I can go next. I think for an Indian investor, I think a message for a lot of funds who are the audience today is to please, can you stop talking in dollar terms? It takes me a lot of time to multiply everything by 70 or 75 or whatever days the rate is. It's not natural. It's not intrinsic for an Indian investor. If you want Indian money, tailor it to Indian money, talk the language, say what you need to say, because heart is loudly beating desi, thinking rupees. So that is, I think, my big one takeaway for funds, because we find it very difficult to evaluate when 70% of your funding is already tied up with overseas investors and you're looking for 20-30% or smaller, and on many days with an Indian investor, really we get overshadowed because our considerations are not the same. We are different in our viewpoints towards impact, and there is no product available for us, or very few products available for us. So that's for the funds out there. For the wealth managers, I think, a lot of you are now kind of advising on trusts and succession, etc., with the estate duty hangover coming, right? That there's a whole sword hanging over our heads with estate duty. Now, 10 years ago, 12 years ago, when I talked to advisors, they were not advising you on estate duty mechanisms. Now, so just as they tailor their advice to change as per the times, I think the one area of advice which is missing is impact. How do you craft a portfolio for impact, whatever mechanisms you would like to use? So a lot of wealth offices are also advising now on philanthropy, but not advising on impact investing still unless they're asked for it. And therefore, I think an impact advisory needs to be part of your essential advisory kit, because without that, people are not aware that impact investing can be a vertical. They can have a dedicated allocation to it. So that I think, and the third thing, of course, is for more family offices to bond together, find ways to co-invest, let Indian rupees, Indian families with Indian considerations, they see in all their ways, come together to fund larger ticket sizes and get this momentum going. We do find sometimes unable to deploy the capital we need by ourselves. So having a consortium of other family offices, high net worth individuals with an impact focus, with a dedicated allocation to impact, would definitely help us take our work further and expand the capital coming towards impact.
Great. Thank you, Leena ma'am, for those points. I think Mr. Bhasin unfortunately had to leave. He had a hard stop. So I think we've kind of come to the end of this discussion, and I think this was very enriching and valuable. I think 2-3 broad points came across, and I just wanted to summarize it before we end this conversation. I think one is really showcasing the impact and speaking the language of impact along with the language of returns is something that came across quite clearly, and I think is valuable. I think the second point that Vineet made was really showcasing the champions of the sector from HNIs and family offices who are actually participating and kind of using them in a way to highlight how family offices are already sort of participating. I think is the second point that we can take away. And I think the last point is the whole issue of education, is to be able to explain to people that there's a whole list of, there's a whole continuum of, returns and impact opportunities. And I think, like Vineet, you said, it creates unpredictable returns, so I think, somewhere being able to showcase, therefore, the quality of the impact and showcase also that this is the kind of, output that you can expect both on the return and the impact side, I think are the 2-3 broader messages that we got. Thank you so much. Mr. Bhasin is not here, but Leena ma'am, Vineet and Soumya for your presence here. I'd love to also thank all the people in the audience. I think we had upwards of 120, 130 people in the audience, a very elite audience. Also wanted to put on record thanks to the team at Waterfield as well as the team at IIC. I think this is just one step. We hope to continue this conversation and undertake a series of activities and efforts to continue to work with family offices in this very, very important issue of how is it we can get domestic capital to support our own impact entrepreneurs. Yes, international capital available, but I think pushing the needle on getting domestic capital to come into impact investing is definitely crucial for us from a diversification perspective, as well as from just pride in our own country perspective, that why will we not get our own domestic capital to support our impact entrepreneurs. With those words, I want to bring this conversation to an end. Thank you very much again, Vineet, Leena ma'am and Soumya for your presence here. The report is available in the link